Tuesday, June 2nd, 2026, Maneco 64, home of alternative economics and contrarian views. We're going to look at the general stock market. We're going to look at the Dow Gold ratio. And I'm going to ask the question whether the stock market is really that much overvalued in terms of real money, of course, because there is a lot of talk out there, and rightfully so, that the stock market is at levels not seen since 1929. People looking at the Buffett indicator, which is the market cap of the US stock market to GDP, and saying, look, this is not normal. We're going to see a crash. But what if it's the fiat dollar that's collapsing? And we know from the Austrian School of Economics and from the crack-up boom or the melt-up that when investors or the general public realize the currency is not going to have any value, that the inflationary policy will not end, they will jump ship, and they will want anything but the currency. And one of the things that is real are companies that are quoted in the stock market. Of course, monetary wise, I continue to believe that gold and silver and hard assets will come out the best out of the currency collapse. Companies, let's say in the financial sector, insurance sector, fund management, I would say they're going to suffer. And we're going to look at the Dow Gold ratio, and you'll see that we're not that overvalued right now relative to past periods, all the way back to the 1920s. Before I do, I'd like to thank all of you for the interest in the channel. Make sure you subscribe. Make sure you hit the like button if you enjoy a particular video. And yeah, make sure you hit that little notification bell to be notified of all my new videos. I post something every day. And of course, I've been doing a lot more interviews than I used to in the past, and I'm trying to get some new guests. I should be getting Bob Moriarty on soon. Yeah, I've been following Bob and 3-to-1 Gold for a very long time, and I'm surprised I haven't had him on yet, but I'm looking forward to that. Yeah, for example, I was looking here at this post on X from Wrecked Fencer. It says something extremely bad is coming. US stocks, are now the most overvalued in 100+ years. Higher than the dot-com bubble, higher than any point since 1929. The higher it goes, the worse this ends. It's understandable that Americans, and I'm not having a go at Americans, they don't really think too much of the currency because the dollar has been supreme. It's been the currency for, well, I would say 100% of Americans that are living today. Maybe the Americans' grandparents and great-grandparents knew a little more about currency, or maybe not. Maybe you have to go back to the Civil War when you had the greenbacks that collapsed, or go back to the Revolutionary War where the Continental collapsed. So yeah, America's been lucky that the dollar's always been a currency that's been relatively strong compared to all the other fiat currencies, and that includes, of course, currencies like the Reichsmark back after World War I, and all major really European currencies since World War I. Germany has had two or three currencies. France has been a basket case in terms of currencies. Italy, yeah, so it's understandable. But if we go back to 1929, we need to realize that the dollar was as good as gold back then. So to look at the stock market in terms of the fiat dollar doesn't make sense. It's like comparing apples and pears. It's not the same thing. And that's why the Dow Gold ratio is so important. And I think a lot of people might be, might lose out trying to short the stock market. I think the best way really to protect yourself in this coming melt up that I think we're going to see, the melt up or crack up boom or hyperinflation or currency collapse, is to have a good amount of physical gold and silver. That is the base, in my opinion, for the environment that we're in. And we can see that central banks around the world are continuing to accumulate gold, especially the Chinese. They know what's coming. Unfortunately, in the West, especially here in the UK, our politicians and our central bankers, either they're, I think they're incompetent and they have no idea. They think that gold is a barbarous relic. But so that's what I'm trying to say here. We could continue to see the Dow, the NASDAQ, the S&P continue to go higher in fiat dollars. But in gold, they could turn back down. And we could be at, let's say, a much lower Dow Gold ratio. And it will help reliquify, keep the stock market going. And very few people look at this, of course. So that's what we're going to do today. So I've got a Dow Gold ratio here, a monthly chart. It goes back on TradingView, well, all the way to, let's see, August 1896. So it's a very long-term chart. But as you can see, back during the 1920s, that ratio on the monthly base, well, it got up to almost 19. In 1966, it got up to 28. And at the height of the dot-com bubble, it got up to almost 45. So that was the most overvalued the stock market has ever been since versus real money. And the reason I say real money, and most of you who follow or have been following me for many years know why. Because gold is money and everything else is credit, as the JP Morgan once said in a testimony to Congress. So if we look where we are now, we are the Dow Gold ratio is at 1129. Yes, and I do expect it to go to at least 1-to-1. As you can see, this is a megaphone formation that we have. Back in 1933, it went down to 1.83, roughly, around 2. Back in 1980, we got down to 1. I think, gold was around 850, and the Dow was around 850. And in 2011, we got down to around 6. And we've had a counter trend rally in relative terms for stocks. Yes, and earlier this year when gold was doing really well, this ratio got down to just below 9, and it's now rebounded. But I think it's it's a correction in the bear market in terms of the Dow Gold ratio. And we could go back up, continue to go higher, maybe towards the 12 level, which was the low back in March 2020. But I do expect this to start keeling over this Dow Gold ratio. And so it looks like we're very close to a juncture where gold will start outperforming stock market again. And how will that translate in terms of prices for the stock market and for gold? Well, I think gold will just start going up faster than the stock market. The stock market is going to stay strong. And a lot of people, in my opinion, a lot of people who are pointing to all these indicators that are hugely bullish or bearish, excuse me, that we need to see a crash, I think they'll be proven wrong. But what people are not going to be looking at is the fact that the stock market is quickly depreciating in real terms. And by real terms, I don't mean fiat dollars, I mean gold. And I think the same thing will be, you can look at the same thing in terms of silver. Silver is going to outperform the stock market as well. And I could see in the next few years a point where you need less than an ounce of gold to buy one Dow. And it could be at 50,000, it could be at 75,000, or it could even be at 10,000. But even if gold is only at 10,000, and you might say only at 10,000, you could see the Dow, I guess eventually the Dow in the stock market crash. But I'm leaning more towards the high numbers because that's what a melt up would signify. I think the most important thing for investors is to realize that the currency, the fiat currency, the dollar, is on its way out in terms of purchasing power. I'm not saying it's not going to be around. It will be around. It will at one point, of course, probably need some kind of reorganization like we saw in Weimar Germany, like we've seen in many third world countries. And this is not just happening in the US, of course, it's going to happen all over the world. And I think people like the Chinese, they know this is coming. They're not silly, and that's why they're buying gold hand over fist. They've got a lot more than just 2,300 tons. As a country, the official reserves, I don't think they're letting the world know how much gold they really have. There's speculation they have as much as 30,000. I think it's the US, unfortunately, that probably doesn't have as much gold as it publicizes, the 8,133 or so metric tons, or 261.5 million troy ounces. And even President Trump has come out saying that they need to do an audit. And the thing is, the gold might be at Fort Knox, some of the gold, because some of it is also kept in other depositories, but most of it is in Fort Knox. It might be there physically, but it might have been leased out, so it's encumbered. What happens when that happens? Well, you need to close the leases, which means buying back the gold. So that's how I see things. And my take on this is that I'm going to hold on to my physical gold and silver for dear life. And I also think that the mining stocks, in both gold and silver, are hugely undervalued. Well, they're hugely undervalued versus the general stock market, but they're also very undervalued versus the underlying commodity or the bullion. So I'm going to continue to hold on to that more as speculative, which means I won't have as big a percentage of my savings in that. I think you need to have a base of physical gold and silver for your savings. That's the most important thing. And that allows you also to stay outside the financial system. And I do realize that having the mining stocks is being in the financial system, so you need to keep that in mind. In terms of the markets this morning, yes, we saw gold and silver get hit. We saw treasury yields go up, and a lot of the algos, and we saw oil go up a lot. a lot of the algos are set to sell gold and silver when that happens, and vice versa. And today yields have come back down. I see that the oil price is down slightly. So gold and silver are rebounding, and this is just short-term speculative noise, in my opinion. Longer term, it's people are going to look back in a year or two and say, well, I should have bought gold at 4,500. I should have bought silver below 80. I think a lot of people are going to be kicking themselves, and it's typical of retail investors or people in general. They like to buy things when it's going up, but they ignore it when it's going down. And that's why sentiment is so low in the precious metal sector right now. But anyway, it's just before 7 a.m. London, and spot gold is at 45.22. It's up 37 bucks. Silver is up $1.70 or 2.3% at 76.58. The Dow futures is down 171, which is not much really. It's only 0.3%. S&P as well is down 20 points, 1/4%. And the NASDAQ 100 is down 1/3. And yes, there's a lot of attention on these AI IPOs or SpaceX. This is the huge thing where people are focusing on. And there's no focus on the real world, which is what mining and hard assets is all about. And people forget that you need all that those real things to keep tech going, to keep AI going, energy, to launch rockets or whatever. And I think the sector is being totally neglected, and I think that's where the value is. And of course, this is not financial advice. This is just what I think. With that, I'm going to wish you all a very good day. Take care. Bye.